I think this is one of the forums which has the right platform, has got the right audience, and most important, the right panel. I've gone back as enriched today, so thank you, Shirish, thank you, Amol, for having me. I personally believe that I've attended many other speaker forums, but this is one forum I'm taking back a lot of learnings. So truly been an enriching one. Thank you for having me. So here, it's an interesting question, I'll tell you, because I have got an answer which is in India context to life insurance, because I see life insurance playing a role within the gross domestic savings. So India, post-independence, took almost 57 years to become a trillion-dollar economy. 2004-3, we became a trillion-dollar economy. Then we became, which means it took 56 years to become trillion-dollar economy. It took 11 years to become $2 trillion. It's taken us 9 years to become closer to $4 trillion. I think $4 trillion and gross domestic savings being at 29%, which means one third almost is in savings. Just imagine if India was to play out by 2030 to become a $10 trillion economy. Your gross domestic savings will be in the range of $3 trillion. Now, $3 trillion, you will have an ample place for many financial products to play an important role in helping India save for important events in their life, which will happen to everybody, whether it's child, whether it's retirement, whether it is old age, whether it is planning for a home. Everybody will have to do that. And that corpus will allow India to be able to live a safe and a secure life. And I see life insurance, which today plays a 10-12% of gross domestic savings part of it. With the penetration of insurance increasing, logically, I give you a trend line. If your GDP goes up by 7%, insurance penetration is almost 2.5 times of that. So if the GDP expands to $10 trillion and there's gross domestic savings of $3 trillion and insurance forms 10% of that, I see insurance becoming 14-15% of gross domestic savings, which in the market is going to export. And it makes insurers like us a responsibility to make sure that the products, the platform, the collaboration are in place to make sure that the new advent of money that's going to come in, new advent of hopes and desires, we are ready for that. So I'm going to answer this in two halves. One is the essence of collaboration, the other is the digital readiness. A lot of time in India, we make the mistake of saying we are digitally ready, which means we are either automating our current processes and making them scalable. But the real power of digital lies in the hands of trying to take the experience to next level. You're not trying to take away from paper pen to tech and machine, but you're trying to take the experience to a different level. A problem with insurance has been, traditionally insurance is considered to be very complex, very jargonized, very tedious, very opaque. At the new age, the Indian consumers are consuming products through Swiggy's and Ola, Zomato's and Uber of the world, where they're used to both transparency of information and transparency of experience to be a very different order. People that use digital to be able to leapfrog and make insurance product democratized, easy to understand, what you see is what you get, information flow of knowing my policy is today underwritten, it will be delivered in 30 minutes, I'll have a PDF in my mail account in 5 seconds from there, are things that digital has to do. And the other side, collaboration, I see fintech and well-tech platforms creating ready products and solutions so that manufacturers and distributors don't have to build it upfront for zero base for every new collaboration to happen. They will create platforms, whether it's on the payment side, whether it's on the comparison side, whether it's on the onboarding side, whether it's on the policy loan to, taking a loan on your policy. Fintechs will create those platforms and manufacturers will make sure that their offering becomes far more enriched and the ready to market experience is built out. Because building every tech stack for every manufacturer, every bank is going to be a world that will devoid consumers from having a great experience and getting access to it. Those collaborations, digital mindsets, and creating a win-win for consumers segmented will be the way forward for it. Okay, so there are three different questions in your question. One is about the traditional category having the reputation of being push, and the other is role of new insurers to play in creation of the market. I think this element of, and I've been a decade and a half in life insurance. Unfortunately, I joined just in the 08 cycle when the whole meltdown of global markets were happening. And at the same time, the regulator was creating new rules and engagement of market for manufacturers to conduct on cost structures, on charge structures at all. Fortunately, the era I've been involved, products have got significantly better. I think products have now become mark to market to other financial products. So the products have improved, but the reputation still continues. And the reputation of being not the best product and hence required very aggressive push, the reputation that the products are complex, not easy to understand, the jargonization around the life insurance, the opaqueness in terms of what I need, what I get, are things that are evening off as I speak. Uh, I certainly see now, I don't see queues of consumers lining up to buy the products, but these recognition that life insurance solves a permanent need and has a distinct advantage of solving this need vis-a-vis any of the financial products is happening in the market. So it's about literacy, it's about reputation creation, it's about making the products and services more seamless for people to access and consume. All those journeys are happening. I'm one who's an eternal optimist. I believe um, there's great progress that has happened. At the same time, I'm an extremely dissatisfied person. I feel the progress is slower than what it should have been. To the effort and the value that we can bring for Indian consumers, I think we're a little slow as an industry. But the regulator in the last 1.5 years has made sure that we see the big opportunity, we see the India opportunity, we see the hunger in the regulator's eye, and we see the need for making sure insurance moves up from the elite 10, 15 crore consumers of India to the broader India, which is the real Bharat. And those things are helping us, be more purposeful and innovate faster. On your role of new insurance companies, I can tell you, I'm very happy to say that ET Life, still the last quarter, was the youngest life insurance company. We have been born with a sense of making sure we are an underdog. Hence, we have to create products which are superior to the market. We have to create experience superior to market because we don't have bank legacies. We don't have access to distribution that other large giants have had. So our ability to stay ahead of curve in terms of proposition, the entire go-to-market strategy, the entire market towards segmented propositions and creating tools like U2. U2 is an internal IP that we've created. It essentially does life stage and cash flow matching for consumer and creating a customized solution for a consumer. I can tell you in a few minutes, our agents will be able to create a very high involved personalized proposition customer where it is not the agent's arbitrage to decide what he sells, but consumers like him at that age, at that socioeconomic strata, what are the kind of consumption needs that they have, and what solutions feature to what needs. Which means the agent arbitrage taken away, the knowledge of the agent is no longer relevant. What is relevant is his service orientation. The IP creates its own solution for consumers, and that to me is one giant leap towards taking digital advisory. It's one giant leap to never worry about is the agent fully ready to understand the 20 products that we have for different consumer segments at different age. There is an internal engine that creates a rule and creates a transparency of give get to consumer. So those are things that we build. The other thing I have spoken on the stage was, see, the insurance product has traditionally known to be saying it's a 9-day, 10-day journey. Literally, we are now very capable of issuing policies within 30 minutes of it getting. So literally, at the time you're having your tea, I can understand your need, get you to sign up, and your policy will be issued before we part ways. And that orientation. And the third architecture that we're thinking of is insurance is not a transactional event, it's a subscription ownership. We cannot just deal in selling a policy and then forgetting. The entire service architecture of front to back, of making sure your day one to day two, your maturity, your claims, your nominee change, your endorsement change, et al. Everything is handled by a personalized relationship manager. And there are self-service platform, then an agent platform, a priority desk platform, which does that over the fly. I can tell you, I have been in life insurance for many years and I've worked in 3 different manufacturers. ET Life is an organization with difference in terms of product proposition and a whole lot of experience. And that's where we stand different in the marketplace. And that's where we are growing faster in the market by almost 3 times for the last decade. So hopefully, if we remain on our toes and remain agile, we'll soon meet us as one of the biggest market players that you've seen.